April is Financial Capability Month, a time to focus on financial literacy and well-being. Whether you're looking to learn about savings, optimizing your budget, enhancing your credit score, or just minimizing your managing your finances better, this month is a perfect time to get started. So, it's very few people now that are not having financial issues or having to adjust and budget when they may have not done it before because the economy is everything is going up except our paychecks. So before we get started with the presentation, I'm going to just introduce you to LA County Consumer and Business Affairs if you're not familiar with. So our mission is to create a fair and vibrant marketplace for consumers and businesses. We serve consumers, businesses, and communities through education, advocacy, and complaint resolutions. And we've been serving the county since 1976. So some of the services that we do offer is consumer counseling, complaint investigation as a consumer, dispute resolution mediator, small claims court advisors, Office of Labor Equity, Housing and Tenants Rights, foreclosure prevention, Office of Immigrant Affairs, Office of Cannabis Management, and the Center for Financial Empowerment. And that's the unit I'm representing here today. And all these services are free of charge. The Center for Financial Empowerment is we convene, advocate, and build capacity to strengthen the financial health of county residents. What they focus on Black, Indigenous, and people of color to build economic resiliency. So we convene with other partners, other government agencies, also community-based operations to see what we can do to encourage, to help, and to educate those on their finances. And so, if I don't know if I mentioned before, but our all the services for DCBA is free of charge. So beware of financial pitfalls. Have you been struggling financially? If you answer yes, you're not alone. While it may be hard, it's very important to take a look at your overall finances. Pictures. Let me see. Okay, that's a lot better. I apologize, you guys. These glasses are holding me up. Pictures to know what mistakes you may be encountering that could be causing your financial suffering. If you're unsure of what to look for to shed some light, we compiled a list of common pitfalls and things that will help you to look and see whether you can adjust your finances. So financial snacks, you don't also fall into any habits. Even if you're doing great now, this is just something to look out for. Again, if you have any questions, please put them in the chat and we will be monitoring the chat to answer your questions there, or we also will say 15 minutes at the end to answer questions. So one of the first things that we see, and we all, have most of us been touched by this, not counseling unused subscriptions, services, and memberships. Recurring subscriptions, services, or memberships that you are not using may be slowly eating away at your money. You may not even realize how many payments are coming out of your account. So while each individual payment may be a large amount, they can also add to hundreds of dollars every year. They may be small amounts, I'm sorry. Go through your account statements and highlight recurring payments such as gym memberships, streaming services, and app subscriptions. Evaluate carefully about whether you use services enough to worth that expense. So I had a friend recently told me that she had both of her, she had two Amazon accounts on a different credit card. So she was getting paid, she was paying out twice and she didn't even realize that. So make sure you go and see what money that's coming out regularly. And streaming devices, maybe you don't watch the that particular channel all the time and it's a show that you like. How about just get it for a couple of months or do the 30-day free trial or whatever. And then once you finish with your series, you can go ahead and cancel it. So those are different ways. The gym. And all of us, the new year, we're excited. You want to join a gym. It's a great deal, $9.99, but that adds up throughout the year. If you know you're not using a gym, maybe you can start working on it at home. It's a lot of great videos on the internet, especially YouTube and things like that. So those are certain ways that you can cut back on expenses. Okay. Not discussing finances with your significant other. So this can be a big one as well. Discussing finances with your partner is important when it comes to long-term financial goals and planning. If you're conservative in your spending, but your partner is impulsive spender, that can put a stress on your relationship. Any discrepancies, promises, and compromise should be openly discussed. Have an honest conversation with your significant other about spending habits, savings plans, debt, and goals. And not being on the same page about finances can become a larger problem down the road, like financial infidelity, the act of keeping finances secrets from your partner. I know now it's a lot easier to just order things online. I have an issue with Amazon, and my husband, he's like, again, what is this? So I've gotten better at telling him, but especially with if maybe a $20 something, it's not a big deal. But if you're making big decisions that's going to affect not just you but your household, make sure you're discussing it with your partner. And sometimes it's good to, if you see something that looks great, a deal, and you want to do it, sometimes having the other person hear it out, maybe they can tell you like, oh, do we really need that now, or let's check it in some more. So it's always good, and you don't want to get in the habit of hiding things from your partner. So even if it's your money, you earned it or whatever, not saying you can spend it how you want, but it's a good way to keep cohesiveness and unity in your family, and not let that come in between you. Okay, the next is leaving money on the table. One of the big things, employee benefits. So if your employer offers to match your retirement contributions, you should take advantage of it. Not participating is like turning down part of your salary. Employer-sponsored retirement savings accounts also offer tax advantages to help you fund your retirement by having your money pre-tax contributions from each paycheck. And not just retirement, but also they have the healthcare spending account. If your job has that available where they put an amount and you put an amount, you can use that card throughout the years to pay for doctor's appointments, to even buy over-the-counter medicine and things like that. And if you have a small child, you can get the child care spending account. And so that helps to pay for maybe after school care, summer care, babysitters. So those are different things that you can use, and a lot of people don't know about, or they think it's not going to make a difference, but it does make a big difference. I know we have benefited from it, especially having a child, a toddler now. He's 5 years old, but we were able to save some money by using the healthcare spending account. So start with what you can contribute now, increasing as soon as you can to can at least to the point of and to take advantage of the full match benefit. However, you should consider making bigger contributions if you can. Also, your employer offers things like insurance tax advantages. Your benefit package is part of your salary, and you should maximize all potential benefits. So don't leave money on the table. Even if your spouse, they work for a company that you don't have to worry about healthcare and things like that, you still make sure you take advantage of life insurance, take advantage of different spending accounts, like I said, so you won't leave any money on the table. And again, if you have any questions, please put it in the chat. And we do have my coworker, Aline. She's answering questions and also putting in resources that will be beneficial to you in the chat. Another money left on the table, a lot of people don't think there are numerous tax credits that you may not be claiming or entitled to. The earned income tax credit is one of those that's nearly effective anti-poverty tool. Nearly 20% of those eligible for the earned income tax credit fail to claim it, especially those in underserved communities. If you have not filed in the past, it's not too late. They have a 3-year limit, statute of limitations to get a refund. So go to freetaxprepla.org to find out about the volunteer income tax assistance, which is VITA, and it's a program actually through the IRS. So everyone who is doing the tax who's volunteering, they have been certified, and you do have another certified prepared check the taxes before it goes out. And this is totally free if you make at least under 60,000. It could be a little bit more now. So don't leave that money on the table. Maybe you say, well, I just did some handyman work, or I braided hair, I babysit. Those little things that you may think are small, but you still can file your taxes and not hurt your any type of public assistance that you may be receiving. So again, it's in the chat. If you look, it was freetaxprepla.org, and we're in April now, so we have a little over a week to get those filed. Another thing, is there any income buckets to file EITC? Ellen, if you can help her with that, that would be great. Uh, Thank you for your question. Not planning correctly for retirement, that's another big thing. Not saving for retirement. And we know it's hard because everyone's trying to make it day by day, make it through the month, and you're thinking about retirement. But you may be forced to work through your golden years, and you don't want to do that if you fail to appreciate the need to save for retirement. Putting off savings for retirement, especially if you work a full-time job that has a retirement benefits, but you decide to keep the money and get it every day and get it monthly in your check instead of retirement, that could be an issue. Retirement will be here before you know it, and we see the time is going by really fast. It may seem like you'll be working forever, but if you keep waiting to start saving for retirement, it will take even longer to save a large enough money to refund your retirement needs, to fund your retirement needs. Another thing is to putting college ahead of retirement. I know we want the best for our children and we want to make sure that they have what they need. But if you decide to dip into your retirement to totally pay for college or something like that, that can be a hardship in the long run. They have financial aid for your kids. You can start on, if you have a small child, even a child in early middle school, you can start a 529 savings account. And it's just however much you want to put in that per paycheck or per month or whatever to assist your child. But they do have work study. They have other opportunities the child can take advantage of, but you don't want to sacrifice your retirement and have to work until till you can't work no more because you're doing for your child. And again, I have a child. We love the kids, but you have to make sure that you're able to care for yourself as well, because they want you here too, and to be healthy and happy and not working hard. The answer is in the chat, so thank you. Not planning correctly for retirement. CalSavers is California's retirement savings program for workers who employers don't offer a retirement plan, self-employed individuals, and other who want to save extra. And with CalSavers, millions of California workers have had the benefit of retirement. So you can go ahead with that. That will be in the chat as well. So that's another option if if your job does not offer savings or anything like that, or you're self-employed. It's CalSavers. Okay, another one is not managing credit correctly, not monitoring your credit report. It's important to regularly monitor your credit report and ensure that you're responsible for all the items that are listed. You could be a victim of identity theft, or there could be an error made on your creditor or credit bureau, and it could be impacting your credit. Dispute any items that are incorrect with the credit bureau, and you're entitled to a free report from each of the credit reporting agencies once a year. So a lot of people can go through a long time and not check their credit report. It's easy to have a mistake on there. You could be a junior. You can live on Sakina Daniel on 42nd Street, but they got you mixed up with Sakina Daniel on 42nd Place, because this is all human and also computer error. So make sure they don't have maybe something that you paid off before, but it's still showing, or maybe they put a credit that's twice on there. So make sure you go ahead and get on there and look thoroughly and see what's on your credit report. And also, you can save money by not going to, because we see a lot of advertisements to credit repair, usually $500 or more. Just try to avoid that, because what they do, credit repair agencies, they go in on look at your credit report, and they will dispute every single thing on your credit report. And then once it is in dispute by the credit reporting agency, they take those things off of your report. And during that 30 days, you'll see a big jump in your credit score. You're like, oh, great, that's wonderful. But then once they finish the investigation, they realize it is yours or it's not taken off, you'll see a nosedive, but you've already paid money to a credit reporting agency. They cannot, you can go and speak with a counselor. We will have those services at the end, tell you where you can sign up and meet with someone. but you can save yourself money and a headache by not dealing with them, because unfortunately, some of those places are scams and you can do it by yourself. Okay. And also you can get one of your 3 credit reports from you get one from each credit bureau once a year for free. Unless you are a victim of identity theft, then you can get more. And we can talk about that in a little bit. Another one is not managing credit correctly, carrying and increasing bad debt. Debt can comes in 2 forms, bad and good. Bad debt is credit cards and personal loans with higher interest rates. High interest rates can make it difficult to get out of debt, which delays the process of building wealth. Also, high interest rates mean a lot of times if you could be paying more than someone else. If you both of you have your credit as if your credit is 800, 750, 800, and you're buying a car and your interest rates could be low and you're paying less a month. Maybe someone else to buy that same car, if they have a struggle credit, low credit score, then they will have to pay more. So it's always the thing, because some people think that a credit score is not big of a deal, but it does save you money in the long run, and it gives you more opportunity to, buy, if you want to look into buying a home, or, leasing buying a car or college or anything like that. So make sure that you you check your credit and manage it correctly. Another thing is ignoring a low credit score. Having a low credit score can cost you money. Again, like I just said, you'll pay more and things of that nature. That includes mortgages and credit card interest rates. Um, okay. Another one is co-signing a loan. That's a big one. Co-signing can be very risky, a very risky thing to do if the person does not make their payments. And the cosigner is just as responsible for repaying the full amount. Late payments will also negatively impact your credit. Okay, I have a story about this. One of my good girlfriends, she grew up with someone, they were friends since kindergarten, and it was time for her daughter to go to grad school, but she didn't was not eligible for financial aid, any more financial aid. So she called her friend because her credit wasn't in good shape. So she called my friend and asked her if she can co-sign for her to, for a loan to finish out her school. My friend, she's a great friend. She's always giving and she's happy to help people. And she was doing fine herself. So she's like, okay, I'll co-sign for her. So their daughter finished school, and maybe 6 months later or whatever, when she had to start paying, my friend kept getting calls. We'll call her Joan. Joan kept getting calls from the credit reporting, the bank or whoever the loan was out through, and they said, "Well, you have not paid." And she's like, "Well, it's not mine." And she'll call her friend and ask her, "Did you guys pay? I got a call from the creditor." And she's, "Oh yeah, we paid it. It just must be a mistake." Long story short, they never paid it. So my friend had to take out a second job in the evenings after working her day job because to help pay for those to pay for the college. Her friend, she basically ghosted her. She would see online where the daughter had bought a new car, they're going on trips and things like that, but they just really did her wrong. And so she's finally finished paying for it, but it just caused her more of a headache because she has a house and things like that, and she didn't want that to be affected by it. So just be careful of co-signing a loan. And also, if you are a person that needs a co-sign, make sure that and if they do, make sure you pay it back. If you can't, you need to let them know. You need to communicate with the creditors and do your best to make sure the payments, because it's not affecting you. It's as if the person that co-signed for you is that it's their debt as well if you don't pay it. Okay, so just keep that in mind. Not managing your bills correctly, making late payments. Payments will drop your credit score because payment history is an important factor in determining your score. Late payments can increase credit card interest rates, and late vehicle payments can cause a repossession. If you need help with paying your bills on time, try setting a due date reminder on your phone, writing them on a calendar, or setting up auto pay. Another thing too, call them and communicate. If you're having issues for a month or maybe two, maybe you've been sick, you're off of work or something happened and you can't pay it, call, and a lot of times they will help you come up with a payment plan, or you can find some type of relief or renegotiate your loans. not paying not automated bill payments. By not enrolling to automate bill payments can keep you can easily forget to mail in a check or make a payment by the due dates, which affects your credit. Triggers are higher interest rates and cost you late fees. So if you can, some people can't because they're not getting money regularly. So you don't want that to mess up your bank account. But if you can, you have the money and you know you may be a little bit forgetful, go ahead and set up those automatic payments. And again, if you have any questions, I see you guys are engaged in the chat. Appreciate that. And Aline is answering those questions. So thank you. Another one is not comparison shopping. It pays to shop around. Comparison shopping can save you large amounts of money. Never assume that just because you're a long-time customer, you're getting the best deal or offer. Banks and other utility providers know that people assume that switching means a hassle, so they rely on human laziness to keep your business by not offering you better deals once you settle. Some bank offers great rewards and interest rates to new customers. It's worth shopping around. You could get a better deal. So yeah, if you've been a lot of times if in the city, most of the time it depends on where you live. You can't shop around for um, energy or a gas or whatever you live in Southern California, you either have LADWP or you have Edison in some places, and also SoCal Gas. It's pretty much everywhere. So everyone may not have the option. But for banks and things like that, maybe you just check out a credit union and see, a lot of times they offer better deals. They have better interest rates if for savings, and also interest rates for if you want to borrow money. Another thing is, it's good to shop around and see what you can get. And I lost my train of thought of the things I was going to say, but yes, definitely shop around. Shop around, with clothes, with schools, and things of that nature. Even if you see something online and you see it for this amount of money, but go check out another website and see how much is it there. So that's a good way to save you money as well. Another one, yes, credit unions are the best. Buying a new car loses up to 20 to 30% of its value in the first year of ownership. Many manufacturers offer certified pre-owned vehicles, which are typically 2 or 3 years old and with low mileage. You got the advantage of a new car for a much better value, and all you give up is the new car smell. Keep in mind that when you borrow money to buy a car, you are paying interest on a depreciating asset, and people will trade in a vehicle every few years, wind up losing money on their trade. So just be careful with that. Another thing I noticed when I got my car a couple of years ago, I saved a lot of money because it was actually a manual, a stick shift, and that's almost like a dinosaur. A lot of people, do not know how to drive a stick shift. They never learn, but if you do, check into that because I saved like over $5,000 more from the car I was going to get. And yeah, I have a stick. I grew up, I learned on a stick and I love it. But if you can look at that, that's another way to save money, and it's not too late to learn. I don't really think they're making them too much now, but my car was only 3 years old when I got it, my certified used car. Okay, so that's another thing. Another one's dining out. I'm guilty of this, especially since the pandemic. We've gotten better. We've gotten a lot better, but it can just hit your pockets hard. Whether you're ordering takeout, having food delivered, or dining at a local restaurant, eating away from home can be pricey. What seems like fun delivers a whopping cost to your budget, not to mention your health. If you go to work or go to school, pack your lunch maybe once a week or maybe on payday or whatever. You can go ahead and say that's your day to go to lunch or something like that, but you will save a lot more money. It will be a lot healthier. You know exactly what you're eating, especially if you order and your meal probably was $13, but you end up paying 35 because of delivery fee and all the other costs and everything. And to find out that the restaurants who are with a lot of those food deliveries, they're only getting 30% of the money that you paid. So if I do go out, I like to go and support and make sure that the restaurants are getting 100% of their money because everyone's struggling. And so that can be, but sometimes they have no choice but to do the delivery. Another thing is to, put it in your budget, like I said, maybe once a week, the food delivery order, and, maybe meal prep. And so you know what you're eating. Okay. Another thing is expensive and unhealthy habits. Having unhealthy habits such as smoking not only adds no value to your life, but can be financially draining. According to the National Cancer Institute, the average cost of a pack of cigarettes is $6.28. I've heard they've been as high as, well, that's the average, but I've seen them here around $10, which makes a pack a day habit $188 per month or $2,292 per year, and that's just the average. So, and a lot of people are paying more, depends on where you live. Imagine what you'll save by quitting smoking. Having drinks at home with your friends will be cool, and cooking. If you just, instead of going out, you guys can make it a potluck, and you can come in instead of going out and spending money on expensive drinks that are not that great anyway. And you also make room in your budget and maybe in your waistline. So just to eat it home, have a potluck or whatever. If you can, cut back on, stop if you can, or cut back on smoking, because, I think it does, you do have a better quality of life, and it's just too expensive anyway. Um, Methods to get out of debt. The first one is a snowball method. Debt reductions strategy in which you pay off bills in order of smallest to largest balance, to the smallest to the largest balance regarding of the interest rates. An avalanche is debt reduction strategy in which you pay off bills in order to highest interest rates regardless of balance. So, and I'm sure a lot of us know about this. With a snowball, you have one bill and you're still paying all your other bills. So don't neglect your other debt and things like that. You're paying maybe the minimum if that's all you can pay, but you focus on the smallest and you pay a little bit more. And then once that's clear, don't just pay it and then use it. You put it to the side. Once that's clear, use the money that you were paying for that one to go towards the next one, and so on and so on. So I guess you start up there. I'm like, is it yeah, whatever. You know what I mean? So that really does help. We've done it before. I've done it before, and it's a great method. And then the same thing with the avalanche. Some people like to start on the largest bills, the avalanche, start on a larger bills, and then of interest rates and regard to the balance and go down that way. So, okay. Another one is track and analyze your spending. So track your spending for at least a month, because we spend more money when we're not paying attention, and it's easy, you can just swipe and go, and you don't realize how much money you're really spending. So go ahead and we can add this to the email. We email you guys the video. We can add the tracking sheet form so you can use that, and so what you're spending, and what cannot be cut. So you have your main bills, you have your, of course, your rent or your mortgage, your food, utilities, and things like that. So you cannot cut that out. But then you have things that it can be eliminated. So things that you can hold back on, like we discussed earlier, streaming services, maybe a gym or whatever money that you're putting. That you're like, well, I really don't need that, so I can just put that, cut that out for a while and try other things that are, that's free, or things like that. So even though that it may seem like it's only a few dollars a month, that does add up. Analyze your spending, and then adjust your spending habits. So those are different ways. Well, if you write it down, you can actually see where your money is going. And sometimes you're like, dang. And I did that before, especially even with the we talked before previous thing about food. You realize that all the money that I spent on food, that could have been towards to something else. And during the pandemic, all of us got, we couldn't really go anywhere. We were at home and, basically online and watching TV. So some people were sick or they were scared to go out. You just wanted to social distance. So you had food delivered. And yeah, I probably could have bought another car, but not another car, but still, we overindulged a little bit more because there was nothing else to do, really. So yeah. Okay. So a program that we have, so we're getting towards the end, but if you have questions or want to set up a counseling or go online and get services and resources, you can go to Get Ahead LA. So it's getaheadla.gov, and the Los Angeles County Department of Consumer Business Fair Center Financial Empowerment created Get Ahead LA to make sure LA County residents have a resource at their fingertips. another So these are different ways that you can reach out to us. You can go online on our websites, dcba.lacounty.gov. That's our main site. Social media, like Facebook, Instagram, or on X. And also we're open every day from 8:30 to 4:30, I believe, or you can call us. I believe the number is 800-593-8222.